Apart from that, we saw custom duty reductions on mobile phones, gold as well as chargers as well. And these were some of the key moves in this particular budget. Leading up to the election, we had, the 2024 budget in February as well. Let's see some of the reactions, as you can see in this particular time frame as well. One of the key moves was increasing the budget for capital expenditures to 11 lakh crores, the first and a very huge budget as well compared to the last decade. And we did see one of the positive reactions in the week and the month after as well. For 2023, it was a very budget.
Hi, thanks so much for joining in. You're watching NDTV Profit. This is Ask Profit. This is the show that gets you answers to all of your stock-related questions. But before we start that in earnest, let's talk about earnings. And Bajaj Auto stands out as one of the top gainers, if not the top gainer on the Nifty 50 right now. And it's reacting to the earnings that it has displayed, 2.7% higher at this juncture. And we're joined by Rakesh Sharma, who's the ED at Bajaj Auto. Rakesh, thanks as always for speaking to NDTV Profit. Pleasure speaking to you personally after so many years. But let's talk about the numbers. I think what a lot of people are focusing in on is the fact that you managed to keep your margins more or less intact. In fact, you've improved by 10 basis points and it stands at above 20%, and that has been consistent. Talk to us about how you've managed that, one, and talk about the domestic market as it stands right now.
Yeah, good morning. Indeed, this is the fifth successive quarter where Bajaj Auto has delivered EBITDA percentage margin of more than 20%. And as we've been doing in the past, it's the practice of very judicious pricing management, and of course helped by the slight softening of the rupee, which has occurred in Q3. And that, from our point of view, was very fortuitous because it has occurred at a time when the exports have surged by 27% last quarter. And after almost 9 quarters, we clocked more than 500,000 units of exports and almost $500 million worth of exports in Q3 itself. Of course, there were mitigating factors like the little bit of the mix because of the rise of Africa. The two-wheeler and three-wheeler electric business has now expanded to almost 22%. But the good thing which has happened particularly in the electric two-wheelers is that with the launch of the 3.5 series in December, we have gone from the red zone to the green zone in terms of profitability. We are now above EBITDA break-even, even in two-wheelers. Three-wheelers, of course, electric three-wheelers enjoyed very healthy margins. So, and with the backdrop of relatively stable commodity costs, all that is what went into managing the 20.2% EBITDA margin.
Good morning, Mr. Sharma, and thank you so much for joining in today. It's Puneet this side. I just wanted to ask you about the 125cc segment. Now, as a whole, you've been very bullish on this space, more than, of course, the 100cc space as a whole. I just wanted to take forward your comment because, you said that 100cc, the 125cc space has been growing at double the pace of 100cc. That's one. I just want to reconfirm if that's still the case. And I wanted to just understand about the market because we see that roughly 30 to 40% of 125cc is towards the traditional commuter bikes, while the rest, including yourself, have introduced the Pulsar and other competitors have had the most sportier bikes. So just wanted to understand how you see the market growth going forward. Will it be in the new sportier versions, or do you see it in the more traditional space to continue having roughly 30 to 40%? Because both segments have been growing at a steady pace.
Well, the construct of the motorcycle growth, first of all, the construct of the structure is almost 50% 100cc and 50% 125 plus cc, not just 125cc. So it's from 125 to 500. And if you see over the last 5 years, there has been a shift in favor of 125cc plus segment. So that segment has now become larger than the bottom half. And that trend is persisted and it is continuing. We are observing that even in the last quarter, that the 125cc plus segment is growing at almost twice the rate of the 100cc segment. That is the segment which is of our strategic focus, because we believe that is where, number one, the margin opportunity is much larger. Number two, we find that it is easier to differentiate. There are more degrees of freedom to a company like ours to differentiate our products and draw the customer in towards better styling, performance, etc. Those degrees of freedom are rather limited when you look at 100cc, because the customer has a singular focus. So because of these two reasons, the 125cc plus segment is where we have a very strong strategic focus. We are currently number two over there, and on the back of innovation, meaningful innovation for both the commuter-oriented customer as well as the performance-oriented customer. Both have to be tackled in the 125cc plus segment, and both are in our target. Though traditionally, Bajaj, thanks to the franchise of Pulsar, enjoys an image and equity of being more performance oriented. But we have extended the brand to include offerings which also engage with the more commuter oriented customer. For example, things like offering single seat versions. Usually the performance oriented bikes come with split seats, etc., which are more sporty looking. The single seat, for example, allows...
Sorry to interrupt, Mr. Sharma. Just one question quickly on exports as well, because, we've seen, Africa come back in this particular quarter compared to the last one. It's been almost of 100% growth. If I'm, please correct me if I'm wrong, but it's been a very strong quarter for Africa in terms of the revival, while Latin America has anyway been doing well with your focus over the last 3 to 4 quarters. I just want to understand the scope of both these markets, because while there are some uncertainties in terms of currency for Nigeria as well as Africa as a whole, do you see in FY26 being the export segment that will drive the growth once Africa, and hoping that it does better, but your Latin America growth also continues? Because you did mention that Latin America could be double the volume of something which you do in Africa, which is anyway a very high number. So just wanted to understand your understanding on export in FY26. Could it be much faster than, of course, the FY25 numbers, but it could challenge the growth rates of the domestic market as well?
Well, there is no point comparing domestic and exports. Each business has to be managed on its own merits with its own challenges and opportunities. Having said that, Latin America today is the single largest region in the emerging market for the motorcycle industry in volume terms. It is almost twice that of Africa in terms of the size. Even if I take pre-COVID times of Africa and put that number, Latin America now far exceeds that. In value terms, it is almost 3 times, because you end up selling better end product over there. We've got a very good position in almost all the key markets of Latin America, which are Mexico, Central American countries, Colombia, and now of late in Brazil, then Peru and Argentina. These constitute the main markets, and Bajaj Auto has got a rich history over there, good brand recognition, etc. So that, as you are rightly saying, hopefully should continue to drive the exports. The recovery of Africa is good. It has finally got into a year-on-year growth in the quarter. It is not 100%. I think there's some mix-up in figures over there, but it has just gone from negative to positive.
Rakesh, Rakesh, apologies. I'm running out of time on this conversation, but I do want to get your opinion very quickly. So you mentioned that you've maintained that margin trajectory and you've maintained it above 20% for 5 quarters in a row. Based on everything that you've said, it seems like that is going to be achievable heading into the 4th quarter as well as into FY26 if exports remain strong and if your mix in the domestic market remains the way it is and improves along the trajectory that you've already spoken about, one would assume that that margin trajectory holds, or will it improve even further?
Hopefully, it should hold because as I said, exports is growing and there is a gentle devaluation of the Indian rupee, which will always improve the realizations. I also said that our electric business has made a substantive swing in terms of its margin profile. So through a combination and with the at least near-term outlook on the commodity baskets, there are some pluses and minuses. These are cancelling each other out, and the cost outlook looks steady. So yes, we are optimistic about the margin outlook.
Fantastic. Thanks so much for joining us and giving us the perspective you did, Rakesh. Always a pleasure speaking with you, and look forward to the next conversation as well.
Thank you.
All right, it's time now to introduce our experts for the day. We've got Vaishali Parekh, who's Vice President Technical Research at Prabhudas Leeladhar, as well as Rajesh Agarwal, Head of Research at Own Capital. Thank you so much to the both of you for joining in. Rajesh, I'm going to speak to you first before we do anything else on ITC Hotels. What did you make of the price discovery that has taken place, and would you be a buy in ITC right now?
Good morning, Alex. Good morning, Vaishali. ITC Hotel, the listing price was disappointing, I would say, because we have expected it to list at 200 plus levels, but due to market conditions, maybe it listed at around 175, 180 odd rupees. But going by the fundamentals, it's a buy from our side. It's a very strong brand, I would say, with they are operating to 6 distinctive brands. So market cap maybe around at this level would be 36 to 37,000 odd crores. That's cheap considering the fact that the kind of growth this company has given, the double-digit CAGR growth on revenue, EBITDA, EBIT, all levels, the company has been doing well. Average room rent have gone up from 7,900 in FY19 to 12,000 currently. And they have 140 hotels into 90 destinations, which they are planning to increase to around 200 properties, 18,000 keys by 2030. The growth plans are good. The company is doing well. It's a strong brand. I think it's a buy from our side. This kind of listing is just because of market condition. Otherwise, it deserves a better price.
So this kind of condition is just because of the market condition. This kind of listing is just because of the market condition, is the view coming in from Rajesh. And also, the valuation picture was quite high for ITC Hotels, which is why we're seeing, it being listed at a discount. Let's go to the first caller of the day. Zenith from Bengaluru is calling in. Zenith, a very good morning to you. How can we help you?
Very good morning to everybody. And I'm holding CDSL 200 shares at the price of 1,714 rupees.
Okay.
My question is, what would be the right accumulation zone? How far will it go down so that I can start accumulating? And what is the positioning in the next 6 to 1 year?
Okay. I'll take your question with Rajesh again, Zenith. Rajesh, your view on CDSL in terms of revenue. There was a margin slowdown, of course, and there was a lot of chatter going on with respect to CDSL also, post its earnings. But what do you make of the earnings, and what's the outlook for the next 1 year?
See, earnings were somewhat down, I would say. It was not up to the mark, but still, I think the long-term fundamentals are very good, with number of clients increasing day by day, insurance being dematerialized. We have a lot of new issues lined up in the next 6 to 12 months, and these things are going to be beneficial for a company like CDSL. It has corrected quite a lot in the last few days, I would say. It's a buying opportunity for long-term investor. As far as levels are concerned, I think long-term investors should not be focused on levels only, because fundamentals are very strong. Maybe if you want to buy, say, for example, 100 shares, you can buy 20 now and 20 into staggered way. But it's a buy from our side.
Buy, all right. And in fact, we were speaking about these capital market plays earlier in the day. A lot of them been beaten down the recent past, just basically because of the kind of scenario we've seen across the board for Indian equity markets. But we've got a question on Mahindra & Mahindra in the automotive space, and It's a short-term question. Shishir has got this question. He's bought at levels of 2,914. He's looking for a short-term view. He's got 255 shares. So okay, there seems to be a mistake in the price. I think this is incorrect because the price of, let's pull up Mahindra and Mahindra. We're not talking about Mahindra and Mahindra Financial Services, we're talking about Mahindra and Mahindra. So 2914 is the buy price. He's got a short-term view. What is the view on the charts, Vaishali?
Hi, very good morning, Alex and Rajesh. Yes, so I think market has overall taken a good beating, and auto index was also battered. But compared to all the stocks, Mahindra and Mahindra is still having a steady, good strength. And I would say wait it out. Not in a hurry. It's not a trader's market right now. Actually, the prominent support lies at 2650. And just few days back, we saw the stock going to low towards 2750. But the projected target comes to around 3100. So I would say if you have to maintain a stop loss, 2750 is the stop loss. And if you want to wait, 2650 as a positional trade is the support, and look for a target of 3200.
All right, so that's the view coming in on M&M. Moving on to the next counter. NHPC is the counter, and Praveen Reddy has bought 300 shares at 111 a piece. Now the stock is trading at roughly 75 odd rupees, and he wants to know whether the stock will move above 140 rupees in the next 6 months or not. Vaishali, I'll come to you again. NHPC is the counter. 6 months, will it break that level of 140?
Well, it's hard to tell, but I would say it's better at these levels. 70 now is support. The stock is really beaten down, quite an oversold zone, even on the daily and the weekly chart. So I don't see the stock going below 70. So I would say average it out at around 70 to get a better cost price. And at least one can expect a bounce up to 95 to 100 for now.
All right, that's the view on NHPC. The next caller that we have is Rajesh from Bengaluru. Rajesh, a very good morning to you. I believe you have a question on Anant Raj.
Yes, ma'am, rightly said. In fact, I really appreciate you all of all the the NDTV team as well as all the analysts.
Thank you so
because you're
much.
doing a tremendous job.
Thank you so much for those kind words, Rajesh.
I have my query to Vaishali, ma'am. In fact, I'm trying to enter the Anant Raj, ma'am. I would like to know what exactly the price I have to enter, and equally, I would like to understand what is the reason for this 40% fall in last 2 trading sessions.
Right. Vaishali, he wants to know the levels, but since he asked, Anant Raj was down for 2 about days after the DeepSeek's announcement, because Anant Raj had entered into a partnership with Google to provide data centers for their the AI platforms, and because of which the stock was down 2%, but today it did hit an upper circuit of about 10%. It's trading at about 7% right now. Is this the right time to buy Anant Raj?
So I would say 530 acts as a very good support. Start accumulating. As I said, it's not a trader's market, but look for fair value. And I think 530, 540 makes a good base right now. If we are saying that it's in sync, market is showing signs of bottoming out at 22,500, then I think 530 to 500 is a good support band, and buy at those levels.
Okay. All right. So that's the view on Anant Raj. And I think so a lot of stocks that took a battering yesterday, not least of which NVIDIA, bounced back quite sharply overnight. It recorded, in case you didn't know, the biggest fall for any listed stock in the United States in history on Monday, and it recovered about 9% in trade overnight. But we got Suzlon. I'm wondering if it's still holding on to the gains that it had this morning. A very strong set of numbers, and there you go. No sellers in the stock right now, so if you missed the bus, then well, you'll have to wait for that circuit to open again. Ravi Suresh has got this question. He has bought at levels of 50 rupees per share, and he's wondering whether he can hold for a period of 1 to 2 years. Rajesh, on the fundamentals, it looked very strong in the third quarter, and the prospects look very good as well. Would you agree, one? And would you say hold on?
See, hold on, I would say, because the numbers were pretty good yesterday. They have reduced the debt drastically. It's almost debt-free. They made some fundraising some months back to reduce the debt. And the numbers that came out yesterday evening was better than expectation, I would say. So hold on for a target of maybe 60, 65 odd rupees in the next 2 to 3 months. For next 1 year or so, we need to look at quarterly numbers coming, whether this performance is being repeated or not. So it's very difficult to say 1 year target, but yes, 60, 65 rupees in the next 6 months is quite possible.
Okay. All right. I believe we've got the next caller. Ricky is calling us from Mumbai itself. Ricky, hi. Thanks so much for calling us. What would you want to know about?
Hi, good morning.
Good morning.
Yeah, actually, I bought Trent shares of Trent at the average price of 5,500, 25 shares. So I just want to know if I can accumulate more at the current price or should I wait for the results?
Okay. Okay. So, but what is your time horizon? Have you bought for the long term, Ricky?
Yeah, very long term, at least for 5 years.
Okay. Okay. And all right. And what drew you to this stock and why buy at 5,500? You must have bought recently, right?
Yeah, recently, just a week ago.
Just a week ago. So you saw the drop in the prices and you thought that it was attractive.
Yeah, I just saw the dip and I thought it's the right time to start buying in some small quantity.
Got it. Okay, Rajesh, on the fundamentals, what would you be looking for? And 5,500, he's already in the green. So what are the prospects based on the fundamentals? He's got, as he's pointed out, a 5-year time horizon.
See, for a 5-year time horizon, it's a very good stock, I would say. Belonging to the Tata Group, doing very well. Almost all their stores, be it West Side, Zudio, everything is doing well. But averaging at only a difference of 25, 50, 30 rupees or maybe 50 rupees is not advisable. One should average only when there is a gap of 5 to 10%. Otherwise, it should not be done. Otherwise, your price differential is nothing as such. Hold on to this. For a target of 6,500 odd rupees in the next 1 year. Buy on any dips, I would say. If it corrects to around 5,400, 5,300, then you can add.
Right. So that's the view coming in on Trent. Moving on to the next query. We have Vandana from Karnataka. Her query is on Adani Energy. And she wants to know whether this is the right time to enter into Adani Energy or not. Vaishali, I'll come to you.
I would say actually Adani stocks also have seen a good corrective move, and this too is also in a oversold zone. So I would say if one has to buy right now, it has to be done with a strict stop loss, because right now, as we are seeing, that market is going through a volatile risk. So 720 should be observed as a stop loss, and look for a target of 780 to 800 levels.
We've got a caller next. Alex is calling us from Kerala. Alex, hi. Thanks so much for calling us. How can we help you today?
I need to know the view about JSW Energy.
Okay.
JSW Energy, its stock is down. I am expecting whether it will get on or not at 400 levels, and I am expecting the PE should be coming down to median PE up to 32. It will be good.
Okay. And understood. Have you looked at the earnings, Alex?
Yeah, earnings are not good, but this is due to, I think, due to the margin pressure. If the margins is come back to its original margin level, there is no issue. I think going forward, if they improve their renewable energy sector, they improve the renewable energy, their margins will be improved, and from that they can get good results. But their revenue and profits are not affected due to their business, I think, by margins only.
Okay.
Is there any issues? I don't know.
I see you've studied this in a fair bit of detail. In fact, I hope you've also caught the analysis that we had earlier on in the day. My colleague Mika tracks this very closely, and we did speak about it. But let me go to Rajesh on the fundamentals. Rajesh, I'm sure that you've also looked at the numbers. What do you make of Alex's research and Alex's analysis in the stock? Would you say that he's right, and would you say that he should buy at the current level?
See, Alex has done a very good job researching the stock, and I would say every investor should do this, because after all, it's your money and you should do some amount of research before putting some money into a stock. As far as JSW Energy is concerned, long-term prospects looks very good. Yes, this quarter numbers were below expectation. Bottom line was down by around 50%. That was not expected at all. But FY26 earnings is trading at around 29 odd P. So that I think is reasonable considering the kind of capacity is high, the kind of new areas it's going into renewable and all. So it's a buy from a side. Maybe in the next 1 year, 15 to 20% upside from the current levels is quite possible.
So that's the view coming in on JSW Energy. With that, it's time to slip into a short break, but don't go anywhere. We'll be right back answering all your queries on the other side.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
The union budget is around the corner. What could be announced and how will it impact the market? UBS comes out with a key report. UBS thinks the impact of the budget on the stock market would be muted as the capital expenditure and consumption boost could be limited in this time around. But what does UBS estimate the government could announce? We bring you what UBS expects in 5 key aspects. The first one's, of course, the impact on the stock market. Government's fiscal deficit, which occurs when the government's total expenditure exceeds its income. The third aspect would be infra companies to be impacted in this key budget, changes in the capital market structure and taxation, and finally, what government companies could be divested this time around. Now, UBS feels that the budget might not boost the market as the expenditure on consumption as well as capex might be lesser compared to the previous budget. Now, this time it is assumed that if the fiscal deficit is contained at 4.5% of the GDP in 2026, it could of course be a shortfall met by borrowings. Apart from this, UBS feels if the capital expenditure for 2026 is budgeted at a similar levels of rupees 11 lakh crores, similar to the FY25 budgeted capital expenditure, it could be negative for companies like L&T as well as the other core infrastructure companies. UBS also says the importance of domestic orders for the infrastructure companies is now higher given the limited overseas opportunities, especially in the Middle East. In this regard, UBS thinks companies exposed to private emerging infrastructure and power value chains are relatively better placed given the private sector capex growth remains in the double digit. Now, UBS also does not expect any changes in the tax policy, especially for the capital markets in their base case estimates. UBS also expects the administration to maintain a lower target for divestments of around 30,000 crores for FY26. UBS's revenue collection estimates are marginally improved in line with the nominal GDP expects, and the gross tax revenues will be in a growth phase of about 11.5 to 12% in FY26 versus about 10.7% on a year-on-year comparable basis between April and November of 2024. In terms of divestments, as mentioned, the target is around 30,000 crores for FY26, which is lower than the 50,000 crores estimated for FY25. From year to date until FY25, the government has only fulfilled 9,000 crores in terms of divestment versus previous targets of about 50,000 crores. and UBS expects stake sales by the government in companies like NMDC Steel, IDBI Bank, Shipping Corporation and BEML as the likely candidates to be pushed forward in FY26. What do you think of these particular measures, and do you think the government will lower the capex or increase it in this particular budget? Let us know in the comments below and follow NDTV Profit for more.
Welcome back. You're watching Ask Profit, a show where we get all your stock related queries answered. For viewers who are just tuning in, you can ask all your stock related queries on the number that is flashing on your screen. You can either call us or WhatsApp us. Moving on to the next caller, Ray from Bengaluru is calling in. Ray, a very good morning to you. How can we help you?
Hi, good morning. So I'm holding 10 shares of Divi's Lab at 57.96. I had bought it for a very short-term trade, because the target was expected to reach around 6,000.
Okay.
But since then, the price is falling, and today it has risen slightly, but I just want to know what is the short-term view on the stock.
Got
or
it.
is it okay to average it after another 100 rupee drop or something?
Got it. Vaishali, is that the right strategy to adopt?
It's actually, if it's only for a very short term, then I think he should keep a stop loss of 5,400, and maybe this stock can go towards 5,650 to 5,700. But a word of caution, overall full pharma sector has got into a negative territory. It's into a corrective mode. So Divi's follow a strict stop loss of 5,400, and right now we are seeing just a bounce back. It can go towards 5,700.
All right. Now, ITC Hotels got demerged and got listed today, and got listed around at a 31% discount. And this is only because of the overvaluations for the company. But in terms of the guidance given by the company in its presentation, it had said that it's going to do overall 186 hotels by FY30. But we spoke to the management today. Our reporter Agnidev spoke to the management today, Mr. Sanjeev Puri, and he said that they're going to do 200 hotels by the end of FY30. So listen into a chunk of that.
What we had said is that we will provide liquidity to the company to take care of their growth aspirations for the next 2 to 3 years. Of course, it generates its own free cash flows on it because it's doing extremely well, and also, it's a debt-free balance sheet with net worth of about 10,000 crores. So it's a very strong balance sheet. It has the capacity to raise capital on its own. But 1,500 is being provided for about, the growth plans for the next couple of years. And we're infusing this because we realize that this industry is only going to accelerate over time. And we want the company to be well equipped to be able to invest for the future, invest when there is a great opportunity at hand.
Right, sir. And what part of the management contracts, what percentage of management contracts are made up in the total revenue for ITC Hotels?
We've already said that 45% of our inventory is in the owned space and 55% inventory is in the managed space at this point in time. As we go forward, we are aspiring to be about 200 hotels with 18,000 keys in the next couple of years, which will be about 35% in the managed side and 65% in the managed side.
And sir, what's the occupancy rate so far for the 9 months ended FY25?
We've delivered the results for the first 2 quarters, so you can have a look at that. I cannot give you the guidance for the quarter 3 right now. The results have not been announced. Yeah.
Okay, that is part of a slightly longer conversation that was had with those two gentlemen, and some part of what was said, of course, what you should focus on is what Mahima just pointed out to you, which is that the plan was 186 hotels. They've now said 200, so that's already higher than that was anticipated. And they're saying they're opening 1 hotel every month at this juncture. So capacity is being built very quickly. I know I asked you this, Rajesh, at the start of the program about ITC Hotels, but based on the information that we've just gathered and what the company management has said, do you want to add something? Would you be a buyer at this juncture?
Yes, Alex, I have given a buy call in a starting conversation. I'm still stick to my statement that it's a buy at this juncture. The valuations are very good. Maybe might look stretched at this point of time, but at 37,000 odd crore market cap, debt-free balance sheet, adding 1 hotels every month, target of 200 hotels by 2030. It's a strong buy from our side. Maybe some amount of correction here and there or the consolidation might take place for some long period of time, but ultimately 2 years down the line, it would be give you a good return, I would say.
DAM Capital posted its results earlier in the week, and let's pull it up and let's see where it's trading right now, because we've got a question from Parag. DAM Capital, it's up about 3% right now, but for the week as a whole, it's down about 2.3% or thereabouts. It did react negatively to its earnings. It's up and about today, though. The question is whether it can be bought from the long-term perspective. If I remember the results correctly, Rajesh, their brokerage business was where a little bit of a weakness came through, but their investment banking business looked very strong. Would you buy at this juncture for the long term?
See, brokerage business has been hit because of regulation that came in the F&O segment sometimes back, and this quarter numbers are bad, and would be bad for the coming results too, for other companies which have not yet declared the results. That's a one-time or a short-term blip, I would say. Ultimately, things would start moving up. And as far IB business is concerned, with the kind of IPOs lined up and IPOs gone by, a whole lot of things coming up, I think things are going to be good. This company has been doing very well in the past, and I think it's a buy from our side. But I would suggest let some bit of correction move in, maybe around 275 to 80 odd levels would be a good level to buy if somebody looking for levels.
Right, we already have 3 callers online, but you'll have to wait for a tad bit because we have JSW Energy in focus. It slides as the company Q3 performance disappoints the D Street. But what went wrong in Q3? Meka joins us with more details on that. Meka?
Yeah. JSW Energy is under pressure today in terms of, your stock performance. Well, the stock has hit an intraday low of 10%. It has recovered slightly. It's the biggest intraday fall since June 4, 2024. Now, in terms of the Q3 earnings, well, all key metrics have missed the consensus analyst estimates, and this has been going on for the last 6 consecutive quarters. If you pull up the chart in terms of Q2 FY24, it's missed it by 42%. Q3 FY25 at 15.5%. Q4 FY24 at 18%. And even right now in FY25, in Q1 you saw a slight miss, but Q2 saw a great miss of 18%, and FY25 we have contracted the estimate, but it has missed estimates. In terms of what hurt JSW Energy in Q3, well, lower short-term realizations hurt the company's power tariffs, and this was due to low demand, a little bit of impact from monsoons and low government activities, what management stated. EBITDA was hurt by 18% higher employee costs on a year-on-year basis and a 26% uptick in your other expenses. You also had weak EBITDA contribution from new renewable energy capacity, which was 1.3 gigawatts of additions during the quarter. Weak plant load factors also impacted the overall generation. It was up 10%, but this could have been higher. Debt has also increased 6% on a quarter-on-quarter basis to over 26,400 crores, as the new debt undertaken was almost double the repayments that were actually made during the quarter. In terms of the company, CLSA also says that the M&A deals announced may need more equity raise. The company has announced 2 large M&A deals, O2 Power and KSK Thermal Assets, combined payout of 28,500 crores, which would need 1 more equity raise as per CLSA. And lastly, the valuation picture, stock trades at 26 times FY26 price to earnings ratio and a 2.8 times FY26 price to book ratio, which CLSA states that current valuations are unjustified. Now, the stock was up 57% in 2024, which is when valuations became more expensive, but the stock has lost 1/4 of its value in the last 1 month, as renewable and energy stocks across the board have also seen correction.
Okay. Now, clearly this entire space, thanks so much, Mika, for giving us those details, but this entire space is going to be in focus ahead of the union budget towards the end of the week, because you're ultimately going to be talking about capacity generation, building towards the target for renewable towards the end of the decade. Remember, we spoke with Suzlon's management earlier today, and they were talking about what they're doing in the renewable space, particularly when it comes to wind energy. And they were talking about, for India to reach its target, there is going to have to be a doubling of wind energy capacity. But we spoke with the management of JSW Energy, and here's what they had to say.
Yeah, see, as we had said earlier that by March 25 we'll be reaching 10 gigawatt. We are on track, and we have ended the Q2 with 8.12 gigawatt of operational capacity. And in January, as we are talking, we have reached already in 26 days at a capacity of close to 8.8 gigawatt, which has already been now synchronized and commissioned during the current month. So we are on track to reach 10 gigawatt by March, which we have said earlier also. And with the acquisitions which we have announced of a large platform of 4.9 gigawatt now of O2 power, which will take maybe a few months to get consumed, and the KSK, Manadi, with operational capacity of 1.8 gigawatt and full capacity of once get operational of 3.6. So with operational capacity of KSK and O2 and the process getting consumed, we are absolutely certain that by June 25, we will be having operational capacity of 14 gigawatt. So this is the number. Apart from that, as you asked about the work in progress, we have signed PPAs of more than 7 gigawatt of capacities for which the work is in progress. And the timelines for the PPA now starts, and 18 to 24 months is the completion line. So we'll be adding that kind of capacity going forward in next maybe 18 to 24 months. But yes, once we finalize our business plan for next year, in Q1, we will be coming with our firm plan for FY26 also to give the numbers, and also maybe a revised strategy 3.0 for FY30, which we had earlier said 20 gigawatt, but with order portfolio of 28.2 gigawatt pipeline we have, we'll be definitely revising the numbers for FY30.
Got it, sir. Last question to you. So when would we see actual energy storage capacity coming into operationally in the company's portfolio? By what financial year?
See, the thing is that depending on this order, we are absolutely certain in FY26, the energy storage, operational energy storage capacity we will be seeing in FY26.
All right, the stock under pressure today, down about 7%. Incidentally, we did get a question on JSW Energy earlier today. I believe it was Alex from Kerala that asked this question. We've got this entire conversation on social media, on our YouTube channel. You should be able to find it, or if you're tuning in later in the day, you'll find that entire conversation play out. In the meanwhile, let me go across to our caller that's waiting online, and I believe we've got Kishore from Hyderabad calling us. Kishore, morning. How can we help you today?
Yeah, good morning. I have a 47 stocks in Star Health Insurance with an average price of 690.
Okay.
So I'm holding this from IPO. I'm accumulating, and now it is reaching 690. Can I keep on buying this, or I want to hold at least 1 year? So am I keep on holding this, or am I right time to sell this one?
Okay. Since it's a 1 year time frame, Vaishali, I'm coming to you on the charts. What is the perspective here? The stock is under a little bit of pressure today.
So I think, as a sector, this is doing very well. And currently we are seeing that, yes, there is a little bit of a downslide, but I would say just wait it out because it has seen good corrective move. Keep a stop loss of 420 because once we see a momentum coming in this sector, I think they should do well from here on. So 420 because downside risk is very limited. 420 should be taken as a stop loss. And let's see if it bounces, then you may get good return from here on.
The net profit falling as much as 26% in the quarter gone by.
Absolutely. Moving on to the next caller, Kishore from Hyderabad is calling in. Okay, earnings. I was supposed to discuss about the earnings like you mentioned earlier, Alex. With respect to the premium as well, it was up 13% and net profit was down by about 25%. Moving on to the next caller though, Bala Murugan from Chennai is calling in. Very good morning to you, Bala Murugan. How can we help you?
Good morning, madam. I'm holding Canara Bank share.
Okay.
920 shares at the rate of 1 or 2.
Okay.
Whether can I hold it for a long term?
Okay. Yeah.
Question.
Okay, I think your voice is cracking. Rajesh, I'll come to you. Canara Bank in terms of earnings was decent. Net profit was up by around 12%. The net interest income, however, was down 3%. So how did you read the numbers, and is it a good counter to hold for a longer term perspective?
See, the entire PSU banking space is looking very attractive for the next 1 to 2 years. One, the balance sheet has been cleaned up. They're doing very well, and P's have been down for almost every bank have cleaned up their balance sheet and asset quality is improved. Canara Bank is one of the better performing banks in the entire space, I would say, and one can continue to hold. As far as the net interest is concerned, they have been down for almost every bank, be it private or public, because of low uptake of credit and all those things. But once interest rate starts going down, maybe in this policy meet or the next one, these things will be taken care of. So it's a good buy from a side for a period of maybe equal to 24 months.
Yeah, and a lot of these public sector banks, as I've been speaking about it all through the week, have seen an improvement in asset quality when a few private sector banks are struggling. So that's certainly something to watch for. Sapphire Foods is what we're talking about next, and Kabir Tejwani, who's writing in from Karnataka, has got a question on this. He's got 301 as a buy price and he's got 50 shares. The stock is currently trading at 295, so not too far away from the current market price. Rajesh, on the fundamentals, would you hold on? He's got a long-term view.
See, I would hold on. Same store sales growth has been good. They are closing down their less performing stocks. Dining is being improved. I think it's just a matter of time that the stock starts performing. The downside which we are witnessing right now is just because of market condition that has been there for the last few weeks, I would say. Continue to hold.
To hold is the view coming in on Sapphire Foods. It's up 2.8% as we speak. The next counter is Himadri Specialty. Tarun from Bengaluru wants to know whether it's the right time to invest in Himadri Specialty or should he wait for more price correction. What's the view, Vaishali?
Let me just have a look.
Sure.
So currently it is 480 rupees, right? That's the one. So I guess the stock is already got into reversal and it's coming close towards the resistance of 495, 500 levels. So once we see the stock moving above, so it's already in a trend. So in my opinion, it should be a hold and look for a higher target of around 520 or so.
All right, so that's the view coming in on Himadri Specialty Chemicals. Moving on to the next caller, KR Nair from Bengaluru is calling in. A very good morning to you. I believe you have a question on Shriram Finance.
Yeah.
Go ahead with your query.
Hello?
Yeah, I can hear you, Mr. Nair. Okay, I think, Mr. Nair, you have to switch off your TV in order to, get the voice clarity.
Hello?
Yes, I can hear you, Mr. Nair.
Yeah, because I have been holding this share for a long time, the Shriram Finance.
Okay.
And I have been observing that though the stock is doing well,
okay,
the stocks is not moving much. It is comparatively consolidating. What is the long-term potential? I want to know.
All right, okay. Rajesh, I'll come to you quickly on this one. In terms of numbers, net profit was up 73%, total income up 20%. But how do you read the numbers and what next for Shriram Finance?
See, I would say strong set of numbers, strong company. We're doing very well in vehicle finance. It may not have shown any movement in stock prices as such in the recent past, but going forward, maybe for a long-term investor, it's a good buy from our side. One can even buy at these levels. Somebody holding can continue to hold.
All right. So, question on whether to deploy funds today or not in Tata Steel, and this is Hashmi's question. I'll come to you, Vaishali, on the charts. Tata Steel posted its results not too long back. It's up and about 1.6% higher right now. Would you buy?
I would say, it will be a slow mover. Technically, it is very well placed. Overall, metal sector has seen a good corrective move. So I think it's about time that the metal sector needs to participate. But I would still say that go for Jindal Steel, JSW Steel, because Tata Steel would have a lot of global issues also. So I would say, yes, technically with a stop loss of 124, I think it can bounce up to 145. But I think JSW Steel, Jindal Steel will give quicker returns and better.
All right, Tata Power is the next counter. Is this a good long-term investment is the question coming in from Kareem. Rajesh, your quick view on Tata Power?
We have a buy call on this, despite the fact that it is run up quite a lot in the last 1 year or two. It's still trading at a very attractive valuation, not only the renewable business, but even the fossil fuel business is doing very well, large capacity. They are investing more money into the capex and all into renewable. It's a very good stock for a long-term investment. It's a buy from our side for a target of maybe 18-20% for the next 1 year.
Quickly on Ola Electric as well, the stock is borne the brunt of selling quite a bit. Deepak Daga from Beaver in Rajasthan wants to know about whether or not the new launches will aid the company and improve its market share. Rajesh, any view on this one?
We have a sell call in this, and not only now, but we have been very vocal as a sell call from the last few months, I would say, since its listing. The numbers have been pretty bad. There have been quality concerns. Sales is slowing down. Market share they are losing. And with the kind of competition coming up with almost all the old companies like Bajaj or TVS coming out with electric vehicles, I think the competition going to hot up from these space. So it's better to avoid this.
All right, it's time now, the two of you, to hit the rapid fire segment. This, remember, is where we throw as many questions at you over the course of 2 minutes. Do keep your answers as crisp as possible. PTC Industries, bought 3 years back. This is Vishwanathan's question. He's writing in from Dubai. He's bought at levels of 3,070. He's asking whether to hold or sell PTC Industries. Vaishali, on the charts?
Sell.
Okay.
Ratan India Enterprises is the next counter. Neva from Chennai wants to know whether she could average at current levels. Looking at short-term view, her buying price is 71.8. Vaishali, on the charts?
I would say add more.
Okay, Idea Forge just posted its results. Arvind has bought at level of 660. Should he hold or sell based on the fundamentals, Rajesh?
Hold.
Okay, 43 shares of Motilal Oswal bought at 869 a piece. This is from Yatish. Even Motilal Oswal posted its numbers. He wants to know whether he should exit or add more. Vaishali, on the charts?
I would say add more.
Okay, DLF is a question from Mahalakshmi in Hyderabad. Bought at levels of, okay, I don't have the value, but 840. Okay. Would you hold for the long term, Rajesh?
Yes, it's a buy from our side. Somebody holding can continue.
All right. The next counter is BHEL, bought at the price of 262, 5,000 shares. Seth from Hyderabad has bought it. Should he average at the current levels, Vaishali?
Average.
Okay, Cipla posted its numbers yesterday. I think it was a strong set of numbers from what I remember. Kantibai wants to know, would you buy for at least 1 year? Vaishali, on the charts?
Too beaten down, can start buying. Accumulate would be the better thing. 1380 is the support.
Okay. PPCL, Sunny bought 1200 quantity, bought at 270 a piece from Karnataka, and he wants a short-term view, mainly for dividend being ex-date today is what his question is. Vaishali, is that the right thing to do?
I would say not a OMC lover, so I think just hold it with a trailing stop loss.
Okay. KPI Green, 40% loss. Amit is asking, Rajesh, would you book the loss? Rajesh, would you book the loss?
No, I would hold on, but try to sell at upticks.
Sell at upticks. It's right now at upper circuit. Rajesh, Vaishali, thanks so much for joining in, for answering all the questions that you did, and have a very pleasant day ahead. Thanks so much for joining us. All right, that brings us to the end of this edition of Ask Profit. I do understand that we had to interrupt your questions because we had earnings to talk about, but we've tried to do justice and take in as many questions as possible. We've got lots lined up over the course of the day from Mahima and myself, from the team that put this show together. Thank you so much for watching. Do stay tuned. This is NDTV Profit.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, the union budget is right around the corner, and we get you some of the major wish lists according to Bajaj Broking, the key sector expectations, as well as the 3 key stocks that you should watch out for in this particular budget. Let's start with, some of the key budget expectations in terms of sectors. In terms of banking, they have mentioned that, they're expecting no favorable terms in terms of deposits to come in, but capital infusion for PSU banks as well as insurance companies will be something to watch out for. When you move on and look at the other key expectation from banking, they are expecting that the focus of the banking and the financial space will be on sectors such as cement as well as the metals, which haven't done too well over the last 2 years. Import duty changes to support any kind of domestic production will be something to watch out for, especially for the metal space, because we are expecting and hearing rumors as well in terms of some anti-dumping duties on metals coming from China. When you move on and look at the key other expectations from the infra space specifically, a key sector to definitely watch out for, capex allocation for roads and railways is something that's been standard. It's been increasing steadily over the last 6 to 7 years, and this time again it will be something to watch out for. Apart from that, announcements of any kind of large-scale projects according to Bajaj Broking, likely a new freight corridors will be something to watch out for as well. When you move on and look at specifically from the auto space, it is expected that the allocation for PM E-Drive and the auto PLI policy will be something to watch out for. Do note they've already announced the PM E-Drive scheme. It has reduced the subsidies over 25 and 2026 as well. Any kind of movement in that will be something to watch out for. Tax cuts as well as increased funding for Manrega will also be something, as apart from that, the Bajaj Broking expects is something to watch out for as well. Apart from that, any kind of tax break specifically on the housing loan interest as well as increased allocation for housing will be something to watch out for in terms of this budget as well. When you move on, look at some of the other key expectations such as from pharma as well as healthcare. Support for R&D will be something to watch out for through PLI schemes. There have been some PLI schemes and action on that aspect as well, with special focus on anti-diabetic as well as weight loss drugs, something that's gaining popularity especially in the US and the developed markets. Any kind of move on that will be something to watch out for. Funding for, of course, the Ayushman Bharat as well as institutions such as AIIMS is another key trigger according to Bajaj Broking. When you move on and also look at the defense space, another key sector in the budget has always been in the news. Any kind of capital allocation is something to watch out for. Initiatives boosting defense exports, and it has increased steadily to around 20 to 25,000 crores now, as well as increased procurement from domestic defense companies is something apart from that to watch out for as well. In terms of, apart from other measures such as support for the renewable energy initiatives is something else in the defense space as well. When you finally look at, the consumer sector, and that's been in a lull over the last, a year or so, the consumer staple companies also not reporting very strong results, and any kind of increase in digital taxes, in cigarette taxes specifically is one of the key triggers. Now brokerages have mentioned that this will be a key negative in distribution of legal cigarettes as well, because that can go down whenever there's an increase in tax. So ITC might be in focus. Higher allocation for PM Awas Yojana as well as other similar schemes is something to watch out for as well. In the consumer sector, apart from that, tax relief for the lower as well as the middle class group will increase consumption. There are some media reports speculating any kind of new, income tax percentage to come in, and that's always been in the news, but something to watch out for as well. When you move on and look at, the NBFC space, and that's been marred by expectations in this particular time frame, the microfinance piece is something that's been affected majorly, affecting earnings for all mid-sized banks, and reduction in the loan limit, enforcing the SARFAESI Act is something to watch out for. Apart from that, the credit guarantee schemes, as mentioned from the microfinance scheme and the sector, will benefit all the mid-sized small finance banks as well as the mid-tier private banks as well. So watch out for that. GST is expected to remain unchanged. There has been, the GST meet in December itself. So anything on that aspect will be, a wishful thinking, but could be something to watch out for as well. When you move on and look at, the oil and gas space, competition for LPG under recoveries is something to watch out for all these companies as well. And, finally, a couple of more to watch out for, going forward as well. But, we have some of the other stocks as well to watch out for. The first stock pick is Park Hotels. Now, the target price that Bajaj Broking is given is roughly about 235 rupees per share, 21% upside from the current market levels. It, of course, manages hotels across the owned lease as well as, the managed models as well. Apart from that,